Interest rates are down. This is going to be an interesting one in the comments for sure. Now, my name's James Nicholson. Welcome to my YouTube channel. We're going to talk about interest rates, why they've just dropped, what that means for you as a property investor or a homeowner, and a little bit more besides that. So while you're here, if you haven't done already, what are you doing? Subscribe to the channel and hit the bell notification. 70% of you that watch these videos don't subscribe. It will take you 2 seconds. And if all those people did subscribe, we'd be well over 20,000 subscribers now. So quickly give that a subscribe over there and smash the like button, guys. If you do that, that helps me with the YouTube algorithm. I keep saying we're getting more viewers each and every month. We were at 70,000 viewers for the month this week. Then we went to 75. Now we're at 80,000 people. And smashing that like button is one of the best ways that you can help us. So, interest rates, they've changed. Now, it's interesting because in about 2 weeks, we're expecting the Bank of England to raise the base rate from 5% up to 5.25%. So a 0.25% rise. Now, this is less than we were thinking about a week ago. And the reason for that is, while inflation is still high, I know a lot of people said in the comments on yesterday's video, which was a really popular one, inflation is still high. It's at 7.9%. It did drop more than expected. So we were at 8.7% for 2 months. We were expecting to drop to 8.7% we were expecting to drop to 8.2. We got 7.9. Still very high, still meaning costs are going up, but less fast than they were. That's good. And the market's reacted positively to that. You have something called a swap rate, which indicates where interest rates might end up. And this is down. And so that indicates that people are expecting interest rates to be more reasonable going forward. And so the swap rates have dropped for 2-year deals and for 5-year deals. And that's already been passed into the market. So I'm just looking at the data here. So I want to make sure I get this right for you guys. And so the 2-year interest rate was at 6.81 as an average. And it's not a huge decrease, but it is a decrease. And anything that we can take is good, right? So it's dropped to 6.79%. And so if you've got a bigger mortgage, you might notice that. But what is interesting is it's positive news in the right direction. So that's where we're looking at with a 2-year deal. Where we're looking at with a 5-year deal. So with a 5-year deal, has gone from 6.33%. So that indicates, even just looking at that over 5 years, they feel that interest rates were going to be much cheaper anyway, right? And so the interest average on those has gone down to 6.31%. So both are moving in the right direction, even though they're expecting one more interest rate rise or 2. And so what we all need in this market is just more certainty. This is why interest rates have gone up so much and standard variable rates have gone up so much, because of uncertainty. So banks don't like uncertainty. They want predictability. They want to know where the economy is going. They want to know roughly what the unemployment levels are going to be. And when they get that, it's easier for them to lend money. Whereas what we've been having is stubborn inflation. We had a mini budget, which was carnage end of last year. We don't know where house prices are definitely going to go. Could drop significantly. Some people say 35% drops. And so if you're a lender and you believe house prices are going to drop 35%, then you're going to make it more expensive to lend money. So I think this is a positive sign that even though it's a fraction of a drop, even with what we know what's coming, this is positive news. And so this is really, really good for investors. This is good for homeowners because it's going in the right direction. Now, some of you watching this are going to say, well, hang on, that's nothing. That is nothing. But look at it like this. They know there's more interest rate rises coming. So that's something that they're considering. but still they've brought that rate down a little bit. And that's because of the swap market. Their belief is that over time, rates are going to come down and we're going to be in a more certain position. So this is all positive news in my opinion. I'd love to know what you think about the interest rates. So do comment below. Do you think that even with an interest rate rise looming on August the 3rd, I think it is, do you think that we're going to have, if that happens, do you think these rates are going to go back up, or do you think they've already built in those interest rate rises? Love to know what you're thinking on all of that. But from my side of things, I think this is going to play into things like house prices. And the fact is that if we'd gone to 6% as a base rate, the price drop that we would have seen would have definitely been more, because even though it's 1%, those buy-to-let landlords that have interest-only mortgages, that's a huge difference to someone on an interest-only mortgage. And so that will make a big difference to potentially where prices might end up. And I think it's just good that it feels to me like we're getting somewhere now where we're getting a bit more certainty. Inflation is coming down, not fast enough, but it is edging down. Interest rate rises are looking like they're going to slow down now. Other countries abroad that we kind of interlink our economies with, they're doing much better. So hopefully we can start to monitor that. The pound is getting stronger if you compare it to where it was in the mini budget. I mean, it goes up and down every day, but the pound is getting is significantly stronger, definitely to when Liz Truss was in charge and it was nearly at parity with the dollar. So those are positive things. We were nearly getting $1 to £1, and now it's around 1.30. I saw 1.31 the other day for a period of time. So this means that when we import stuff, it's going to be cheaper. So that as well is going to help with inflation. So there's tons of stuff going on. What about investing? It's interesting to know what you guys are thinking. Are you looking for deals at the moment? If you're a property investor, would you buy a deal at the moment? I've asked questions like this already on these videos, and people say not till 2024, not till 2025. My question is, why not today? If you can get a deal today because someone wants to sell below market value, you can fix at a rate today that works and that deal stacks up. Why wouldn't you buy that today? Why would you wait? Because that deal might not exist in 2024. It's very hard to time the market. A lot of people are sitting on the side thinking, I'm going to wait for the market to bottom out, but you will never know when the bottom is. And once you hit the bottom, it can go back up fairly quickly and you might miss all the good deals. So let me know what your thoughts are. Would you carry on investing at the moment, or are you going to sit on the sidelines and wait and see what happens? Do let me know what other types of videos that you want to hear as well in the comments below. Check out all the other content on my channel, including this video right here.